Oh man, what's going on, boys? So I'm a bit tired, so I'm gonna try and make this really short and to the point, but I want to review the trades that I took today. So I had a lot of trades that I actually took today, and that was kind of like irresponsible trading, just because the market has been in a stage where there's not so many setups out there, and the setups that are out there are not ones that necessarily last very long, where you can realize a really, really, really nice big high risk to reward win, meaning high reward, lower risk. Um, and that is ultimately just showing in the market within like Tesla and obviously writing out some Mag 7, things like that. And as far as options exposure goes, I have not been able to get my hands on anything like that, just because I don't like the risk to reward in price discovery or in a resistance. I don't really like chasing breakouts, right? So what I'm more and less looking for are the names that are kind of lagging, yet building out bases, building out campaigns towards really beaten down areas to then look for a long side trade. And these are obviously trades that bring a lot of success if you're patient enough with them. Um, a lot of these companies, like I said, they're not really going anywhere. Large caps, sometimes what they need to do after such an extensive breakdown or a markdown after earnings or a markup after earnings is digest, cook a lot of the premium that's stacked within those chains post earnings, and then from there and out build out their campaign. And then obviously that's whenever we get the volatility to take um, action off, right? So an example of this was actually Dash, and I don't necessarily know if this name is ready yet, but I was trading shorter expiry, next week expiration calls, and really what my game plan was here was to look for a three lower low accumulation, and what I mean by that is we get our earnings marked down, right? It's a big move for the stock itself, minus 10% after the earnings report. This was a beat on revenue, a miss on EPS, and then what happens is we put in this notable buy wick at the bottom. Now, this is all a premature campaign in the preliminary stages of an accumulation that could potentially be happening over here. And that's all we really need to understand is that there was a buyer on here on this candle, there was a buyer on this candle, heavy volume candle, followed by a build up back into this bear gap, and then it takes a couple days of digestion and absorption of willing buyers and liquidity to match for a seller that wants to stay aggressive up towards the tops of this progression that has been made on the chart, meaning a seller. And then it took just obviously days on end. Volatility is pretty damn low within DoorDash, and the premiums move relatively well whenever you catch a decent trend. And that could just be an intraday trend, especially whenever we're looking at 2 weeks out, 3 weeks out, or even monthlies, right? It all depends on what you're comfortable with trading, so that's up to you. But what happened here was, like I said, we had a preliminary buyer, that buyer failed, and then from there, that's whenever we started to mark our way down for inventory collection purposes, because if there's not enough inventory at this bear gap and then we start failing the higher low structure, we start getting heavier volume sells leading into Monday, May 20th, then what this is going to do is break down and likely target this low because there wasn't enough liquidity within this range or enough of a willing bid within this range to then press up above this range and then retest and then go. This was all kind of a premature campaign for how the name was acting. Obviously, you see some of these immediate recoveries in some of these names, especially after we had a lot of buybacks within the market. And a lot of these names just seeing flows kind of carry its way higher. This is really, really, really common within Mag 7. We've seen these markdowns in uh, Netflix, Meta, things like that that were covered immediately. And we don't necessarily always want to treat it like that because whenever you look at upper ranges where there was a lot of effort, meaning buyers tried to make a push here and then they fail, then likely, like I said, this needs to take out some lows, start finding a buyer once again. That's exactly what happened. We got a heavier volume hammer candle over here where a lot of overzealous traders are going to be seeing the breakdown beneath, breakdown beneath support, and then they rip it higher, they throw in a higher low, um, right off of the earnings candle low, and then they try to move its way higher. The volume is really diminishing again on that way higher, lower high, and then we got a third lower high, and then we got a third lower low. Now the third lower low is a very important spot because institutions like to trade on the bid, right? Essentially what they want to do is they want to fake you out, match your orders with a bigger order at a cheaper price. And typically why this all works out as a edge is a lot of people get a little overzealous and then they become entry slash exit liquidity. So that's exactly what happened beneath this hammer candle, right? So whenever you're looking at this range over here where lower highs were put in on the range, then you could start saying, okay, there was a lot of effort here, little result, and then that result was kind of really dying off into, like I said, a third lower low. And what this is kind of just this bid that was within, that was kind of within the name over here, reestablishing itself beneath that low, and then we find that bid once again. And what really caught my eye on this one, guys, was um, first of all, we got Tuesday of last week a really nice, strong looking candle. And then from there, what happened was Tuesday we started to base into the afternoon, and then we started to develop a really decently strong close for that day. And then the following day, what happened was we popped up. What we did was we started to reject this internal based support that was being established, right? Internal based support doesn't really catch my eye as much just because of the fact that, okay, well, we have, is my Wi-Fi down? Uh-oh. What's going on here? All right, I don't know what just happened. Okay, but what happened was we got this earnings candle low and then this new low. That bid is protecting that new low that was previously over here on May 31st, right? So when you go into the name and you take a look and you say, oh my gosh, okay, we bled into that support. This was a red to green move, and then the following day we bleed once again. This is all kind of just retesting into the upper ranges of like where the earnings candle low is actually at, and then it starts bleeding back down. We base, and then the next, and then into that afternoon, we get a really strong tape into the close, and then the next following day, we try for the breakout and the break, the base, the go. We creeped ever so slightly above some of these highs, and then we saw a failure. But these are all just moves that are really starting to interest me in terms of looking for, okay, we're going to reclaim back in the range, we're going to move, and then all we're really going to do is get relief into what we would think would be like where another lower high would be if this does want to break down. Um, so that's exactly whenever I started to notice this really strong day, not a lot of volume behind it, just because of how coiled we do have of a range over here, how long price action has been trading within here. So whenever you get that really strong tape, that really nice rip higher, and then the next following day, what you're doing is you're coming back down to base off of previous day highs, breakout levels, psych levels, or the earnings candle low itself, then that's when you could start saying, okay, if this gets beneath that spot, that's whenever I'm going to start looking to get out of the position. So I took slight ads over here on this really strong day. Where is it? Okay, so I took slight ads over here whenever this started to break out, and then that went back to break even. And he said, you know what? Um, this is where I'm going to start looking for this to start basing and then see the move higher. Where this likely wants to move higher, like I said, is just back into you could take your high and your low. You can start looking at a discounted range or the golden pocket itself from your most recent high to your most recent swing low. This is exactly what that is, and that was a perfect, clear, clean cut rejection right off of this spot right over here, 112, which is just 618. We base there, base there, base there on the 15-minute, and that was a beautiful opportunity to start scaling. This was a really nice, like almost a 3% move on the underlying from the following day. If you want to take a look at it like this, And then simply what you do is pretty much just cut beneath the 109 spot, which is like right down here. So that's that. That was the Dash trade. Got a really nice win over there. I want to talk about XOM, and I actually shared a little post about XOM today. The reason as to why I've really been liking XOM is we had this little hidden bear gap on the daily, or bull gap, I'm sorry. So what the bull gap is from here, this little green line, and then that bull gap extends up into here, which is the following day's open. Okay, so whenever we're looking at this spot, we can start really concluding that this is where potential first, what would we find down here is likely just relief back into retesting spots, retesting levels. Another thing would be this is the previous level that they try to establish a support off of, which is 110.92 into 110.76. And then we also are in a discounted range from the swing low to the swing high. So we had OPEX volume right over here, and in the next following week, what we had was a strong, relatively strong tape, really nice open gap up, and then a close up towards the highs. So this was a really nice, really nice move that had a lot of opportunity behind it. However, um, the market and its rotations and kind of how it's been looking as of lately has still just been Mag 7 moving its way higher. Um, we might start seeing IWM making a move. We saw some shitco's coming out of bases and growth, so energy was never necessarily a large focus of mine. What I more and less liked was the pullback. I took a couple ads on energy from like over here in these ranges, and then I took them up into this resistance, and I wanted to target the 176 or 117.26 um, little hidden bear gap that we have on the daily chart, but we never quite got there. Although I did realize some decent gains on this one. So whenever we go into the daily, that's exactly what you can see right over here. Like I said, really strong tape. And this was kind of like the heavier volume sell-off on OPEX into the close. And then we get really nice strong relief the next following week. So whenever we're pulling back, this is my area of focus right over here. Okay, and then if you want to look at like that, you can look at that, but that's basically all I was really looking at. So whenever you go into the 15, I started to scale into some calls over here because it's the 618, and then I wanted to build a position with a little bit of time, although what my risk tolerance was a break and a loss beneath 110.76 because I knew he'd probably find a buyer reappearing off this spot. When you take swing low, swing high, the 618 was the previous following day's low. So that's where I kind of wanted to start adding into my position. And then we got a really nasty gap down where it put me really red on the day. Um, Probably uncalled for to add into over here, and I probably should have realized some profit into the close. But where we gap down to is directly into my risk. So I was going to take ads here and then start risking this 15-minute orb candle as where my risk would be, right? And if we go into the 5, we got this really weird aggressive sell-off right into the open. And I think what they were marking this down into was just to move price into the spot where a buyer is looking to obviously bid. And then obviously they kind of evaluate what they have bought and what's going on with the name as we retest up into higher ranges up here. So that's that. That's wherever my risk was. And then I added into this. I mitigated the position very well. I was down about 35% down here. And then I went green as we started to creep our way back up midway through the gap. And then that's whenever I started saying, okay, we're going to hold on to the previous day low. If we don't, I'm out. If we do, I'm looking for this to get relief into the overnight gap or into the retest of this level right over here, right? And it was a very clean move, stress-free, really nice, strong move. And then obviously that's whenever the move started to give up, and then we started to um, fail, right? So it was a bad trade that could have been really bad, but it gapped down into risk. So uh, that's whenever I started to say, all right, this is it. I'm going to average down a little bit more just because that's what my trade plan told me to do. Um, and yeah, I never really thought we would gap down just like that. I thought it'd be a lot easier and stress-free of a morning, but next thing you know, we're getting these crazy sell candles right off of, I mean, we're getting like a 70-cent move within 10 minutes there between the 925 candle and then the first candle of the open. So it is what it is. I thought we would get a rip right off the open until I saw this, and then I was like, all right, we're probably just going to go down for this 110.76. So that's where I'm going to start establishing my risk. Could have been a bad loss. So not my proudest moment, not my worst, but yeah, that's that. I'm probably going to keep this name on focus once we start finding this buyer, and if he wants to stay there. If he wants to move back, he wants to move back. I won't care. I won't watch a name, but we'll see. NVDA. Okay, so NVIDIA was my only loss of the day. NVIDIA was a good trade, just poorly timed. I'm going to be real. Um, so the whole entire thing with semiconductors has been heavier, top heavy potential distribution coming into play, or just mass profit taking, mass liquidation coming off of these highs, parabolic short setups, where you get these extended rallies um, that obviously are going to stall in a very aggressive way. And semis have been on a tear. They've been hard to short, right? They've been very, very, very hard to short. So I was short NVIDIA yesterday, shorter expiry, and I shorted it up here with a little bit more time, and then I shorted it right over here with a little bit less time. So whenever I look at this less time position, Um, this is whenever I started saying, all right, this little pivot up here is going to be a daily lower high. And I didn't necessarily know if that was going to be exactly the lower high, like the high put in. And sometimes looking for the confirmation with a seller agreeing with his previous sell spot it gets a little scary because it's ultimately just speculation with little to no confirmation. And that's one thing that we kind of want to avoid as traders. So this could have been like a next week expiry, just a simple day trade, looking to hold this into the close, looking if we could close back towards the lows. And then I got caught in a position and I didn't scale down here. And then I added and sized up and fucked up my average a little bit over here. And on top of that, added a little bit less time. So I realized a small win into the close whenever I added a little bit less time. And then obviously we just got this nasty agreement where, all right, NVIDIA is going to move with the semis that have been lagging that did move on Monday. And NVIDIA was actually one that had a little bit of relative weakness to it. So I was hoping for a gap down into targeting 125.79. We unfortunately never got that. And also what I was looking at was a little bit of FOMO, except whenever you're looking at this low to this high, 132 failure would have been the key spot. And what I'd like to always talk about is if there's not enough counterparty liquidity at a particular area, what's going to happen is they're going to move into a range that was very expansive, that made a lot of progress in a short amount of time, where there was a range that was breaking down and really getting no retest, really getting no true strong um, true strong consolidation that led to full absorption of a buyer and it led to a new breakdown. What it more or less did was gap up, got the parabolic short set up, and then it capitulated from there. We did catch a short over here, so I was ultimately what this was a profit roll from weeks ago. Because I really never touched NVIDIA shorts again, other than maybe within this like mid range over here. So whenever we take a look at this, we can start saying, okay, 133 to 132, that's a golden pocket entry. What that also is would be kind of price moving its way back into where this whole entire campaign started from, which was obviously from up here into over here. That led to then a 133 down into a 117 sell-off. So this was a very significant spot. Um, One thing that I didn't really like about this was we had like this flat top resistance look over here that led to like absorption from this July 5th Friday. And this close really got me. And then the gap up the following day looked really, really weird to me. With this close, this is a third test of a resistance, technically a fourth because this was what they were ultimately protecting. And then they kind of just, a seller ultimately pulled back, put his sell orders towards this spot right up here, which is this daily bear gap. And then that's where that was protected from. So yeah, poor trade management. It is what it is. Not much we could really do about that one other than potentially stay a little bit more patient or not overnight it as that's a little unnecessary. We had some semiconductor names that were also doing well on that day. Monday, INTC seen a really nice move, a break out of the space on a lot of volume. We also had a really nice strong close for AMD for that day, Monday, which closed towards its highs. So yeah, I mean, definitely not a loss I should really be taking consistently. On to the next one, MO. So MO I was buying with some time. I had some 2 weeks out, and I had some monthlies. This was a really nice strong base on this bear gap from over here. This was a really, really, really notable bear gap. However, there was not a lot of volume on this day. This gap down did not give a lot of pressure. What it more or less did was move back down into this spot that was claimed by bulls and then absorbed on a secondary test. Bull flagged out, got the expansion. With little to no consolidation, we got a retest. The retest held successfully, and then we started to push our way into this massive weekly level from over here up towards that 47 spot. And that's not really where I'm looking to execute. However, like I said, there was not a clear, clean, heavy volume distribution happening towards these highs. What it more or less was, in my opinion, was a buyer that was stalling above the high with a failure to base. And then what happened was we kind of moved our ways lower. We gapped back down to cover a lot of this trend that had little to no consolidation behind it. That's whenever we start to find relief. This name doesn't have a lot of volatility. The tape typically doesn't get lit up by either side. So it wasn't surprising to not really see a lot of volume, but this was a lot of result but little volume, right? That's quite the anomaly. That's something that I find myself to be potentially confirmation whenever you look for the rip back above and then the reclaim the 1, 2, 3, 4, 5 day base on the progress made by the seller over here, as well as this being a lagging consumer. Another thing that I like to talk about is structure development and how that can fail or how that could play out for a really nice risk to reward for a short or a long. This would be where a lower high would be coming from. There was absolutely no volume. Volume was really, really, really drying out on the base. So I figured to myself, you know what? We're basing this gap. This was also some sort of failure. So what happened over here was this was ready for a continuation and a move into the 46.60 spot, right? So I was buying this with time on Monday, and then we go over to Monday, we take a look, and then we start finding the base, the base, the base, the move into close on Friday, coming into Monday. Monday, it was kind of a stall, and then what it did was kind of just sit here back within the base. Beautiful spot to start adding off of the 45.88 spot or the 46 spot itself. That's where I started to add. And then my risk was going to be beneath a daily close beneath 45.75, right? So when we're looking at risk to reward, just pull out the long position. And then keep in mind, this is just your first initial target, guys. That that, does not have to be where your full target would actually be from. Right, so when you're adding here and you're taking profit into up here, and I actually still have a little bit left in this position, and even adding like down into here with more of the time. This was where I was adding more time. You're looking at like a 3.6 to 1 RR, and that's with taking your initial scale being a 2 to 1 RR, and then back into the swing high resistance would be a 3.75 RR, which I still have half the position for because I had some losses that I need to make up. However, XOM was one of the bigger losses that I did make up pretty well for. So that's that. I also had, I had AFRM lottos. Alrighty, so this one was a little weird. There was a lot of flow that has been hitting growth names, and I don't really like flow, but that sometimes will get growth names going. Oh man, this is a really nice chart, I must gotta say. It's just one really, really, really strong rip on a lot of volume that started to stall at those highs. Volume started to die out. And then we started to get like an attempt right over here that failed actually. And then we got a really ugly earnings candle that led to us starting to find these new lower lows within this channel. And what we're likely doing is covering a lot of this imbalanced trend that was been happening from over here. Growth names aren't something that you want to stick with for a very long time and hold a ton of conviction behind a entire rotation on them, because one, um, this is a very, very strong rip in a very short amount of time. IV is through the roof whenever you start getting to upper spots of trend up here, as well as you're kind of trading against dealers essentially, and it's just becomes lower and lower and lower probability. So whenever you are marking your way lower, you want to look at where the initial squeeze kind of started from, which is like these little gaps over here, the bottoms of the ranges of where we actually moved from and broke out of these bases from on really violent volume. So obviously you could see that through the volume over here, heavy volume, and then the volume really just stayed heavy relative to the rest of the chart and what was happening previously before breaking out. Um, and it kind of all started from all the way down here, right? But this is the breakout spot. This is where that short covering rally kind of happened from. So whenever you start finding that support being defended with, yet again, really heavy volume kicking in off those areas, you're essentially looking for just how that buyer is buying here, buying here, buying here, short covering here, whatever it really is, and then he's repositioning or selling off up here, taking profit, and then repurchasing at a cheaper price. 28% move on the underlying in 3 days. Actually, 2 days technically, because that was the close into the next following 2 days. If you want to look at it from like the 3 day perspective, that's 32% on the underlying. So I'm looking beneath the previous low that started it all, right? That's just really how to look at it. And then you go into the 15 and you start looking at, oh, okay. This was Monday. Monday had a really strong breakthrough there. You can't panic because why would you panic over a strong breakthrough of where the support was initially created from? And then what happened was we moved our way lower and then we just started to base and base and base. We come into Tuesday. This whenever I started to load some lottos, size for 0. And then I cut up into here. And I still have some, but don't really know how that trade's going to go, nor do I necessarily care. What I more and less care about is catching whenever that builds out a reaccumulation down here in these ranges, whether it wants to go for this bottom gap, the 618, or these little wicks over here, which was the breakout. Whatever it is, I do think this is going to form a reaccumulation into Q3 if it wants to base out and take its time. Go ahead and do so. By all means, cool with me. Also had a RIVN swing, Want to talk about the Rivian swing just with catching a short, little easy gain. This is obviously a sympathy to Tesla because Tesla's been a major outperformer within the overall market for quite some time. And we're getting record high volume on this earnings gap up, right? So the earnings gap up actually did close a previous gap. So whenever you're looking at this, you could say, oh, okay, this is a previous gap that was closed and then got beneath, failed. And they try to make this a resistance. The resistance failed. And whenever I look at this and I see, oh, they try to make this a resistance. They try to put in a lower high off of this. They dug this with two lower low accumulation into the gap. This is a lower low into the gap that is being bought up the following day. Weak tape, push back down into the spot. Next following day after that into the new week, strong tape, consolidation, higher lows, higher lows, higher lows. This is whenever I started to build my swing and then start risking. Go to the daily chart. This is whenever you start risking this level right over here or these daily lows. And I started to just buy on these dips with some time. So take a look at from here to here. Swing low to swing high. That is creeping right off that 618. And I didn't get the perfect ads here, but what I was ultimately looking for this to do was break above this level right over here, break and base and hold the $15 spot, and then just looking for a move into 16, and that's basically a $2 move on a $16 stock. The IV wasn't anything crazy, so it was quite manageable. It's very important to fill in the bid and get the best possible fills that you can. And then if you can do that, this should make for a great trade and a move back into the heavier liquid areas, which would be the opening range, the opening print ranges of that earnings area. So that's that. Kind of just trading with where the intention is. So that was kind of how I went about the Rivian trade. We also did get a daily print over that level, which added into my thesis. And then whenever you get into the five guys, what happened was we opened here today, and then that open was defended all day right off that level, especially whenever you see the early morning move off of it. What you likely want to do is just cut the position if it gets beneath that low, so it won't result in a loss, just a tiny little win. And then fortunately what I did was not greedy enough to hold and realize most of the position up towards that $16 psych. Was there any more? Oh, Snapchat. Snapchat's just been a swing that I've been building out for some time. Just trying to make my job easier with some of these names that, like I said, have been really big underperformers that are building out these campaigns that likely need a little bit of time just because of how beaten down they are, and they need a large, large, large amount of time. One, to absorb, two, an agreement to move the name. We got a really nice markup, right? I knew this was reaccumulation just by seeing the prints, just by seeing the action in the tape time after time after time again. They just never could really get this to make any sort of progress into this bear gap. However, we had this external high sitting up here at 17,890, and then we got a really nice gap up that led to little to no sellers really showing their hand, more or less just a diminishing volume rally into the top of this like little bear gap, and we never filled it. We never filled it, and that's what really caught my eye, especially with this external high over here. And then there was really no seller over here either. So whenever you're looking at this low to high, that's your discounted range down in there. This kind of was just clinging onto that $15 level, basing and basing and basing and basing. So whenever I started to see this pop and then the pullback back into the range of the base, that's whenever I started to buy with a little bit of time. If you want to take a look at these setups with your moving averages, you can. I started to buy into the upper ranges of this candle over here Friday. What this was I was looking at this little high, and then this was the earnings candle high that was being based. I still have all my shares on this, by the way. Um, and then the low of this little candle, because this is where a buyer is entering in. This is where the tape is getting stronger. This is where buyers are really showing their hand in terms of potentially being able to win on the name. And then what happened, where was it? Right over here. And then what happened was this was a really strong day. So where that all started from could potentially restart again. And that's exactly what happened, right? So I was buying on Monday, buying on Wednesday, and then I also did buy upper ranges over here, and then I averaged down a little bit as I went red. Um, Not the greatest trade, but I'm still holding some, or actually most. Um, so we'll see how this one really plays out. I have enough leeway on my position for this to be a break-even trade, but I probably want a little bit more of a gain on this one with a 1745 to 1790 target. So this is what I'm targeting, which is technically above the 728 high, which is where I'll probably scale a little bit at. So we'll see what goes on with this name. Wouldn't be surprised to see this hit these ranges, these highs up here before seeing lower. So yeah, we'll see.